Good morning, traders and investors, and happy Friday. I can't believe it's Friday, July 14th. July is almost halfway behind us. Folks, it's about 7:41 right now. I'm here nice and early for you, hoping that this video will get to you before the market opens. And remember, if you want it really quickly, subscribe to our Telegram channel, like our YouTube Wealth Press channel. That's where we post these videos. And most importantly, I've opened up my VIP room for the public for the summer to give you the second part of this video live. It's happening today, Eastern Time at 11 a.m. That's right, 11 a.m. And you can find the link below or above this video, depending on whether you're watching it on the YouTube Wealth Press channel or you're watching it on our website. Now let's get into all of this. Now, as you can see here, the Nasdaq is down about 7 points. The Dow's up 154 points. I am going to make the assumption that the Dow is up right now because of bank stocks, which we'll talk about in a bit. There's going to be earnings on banks starting today. Today is the second official day of earnings season, and we'll take a look right now. So, for example, JPMorgan's coming out. Let's take a look at JPMorgan pre-open. Yeah, it's up about 2.5%. So the numbers are definitely coming out good. It's up about 4 points. Let's take a look at Citibank. I want to see what's driving the market pre-open right now. Citibank is up 2%, so I'm not expecting anything negative there. Let's look at United Health. This is why the Dow is up so much in comparison to the Nasdaq right now. Wow, look at that. Up 15 points, 3.5%. And Wells Fargo. Look at that, up 3. So all of the stocks so far. Now I don't know. Keep in mind, I don't know which ones are reporting before the open or after the open, aside from JPMorgan. But based on what I'm seeing right now, all of the earnings are better than expected. That means financial stocks should be rallying at least the first part of the day. Now, yesterday, and this is why you need to watch the VIP room. Yesterday, I said very, very clearly, keep your eye on the bond market towards the end of the day. If you see the bond market come off near the lows, then probably want to get out. But I said if it starts rallying and going towards the highs, don't get out. So I hope you followed me and I hope you listened to what I said, because now it looks like the bond market has more upside. And I originally said it was going to go to about the 104 level. And I'm keeping that conviction because this momentum level is very strong and we don't want to second guess what it's going to do afterwards. We just want to follow it. So again, I'm expecting more upside in the bond market. If you're currently in the bond position, keep an eye on the bond market at the end of the day. If it starts to fizzle out, unlike it did yesterday, probably a good time to get rid of it. But it starts to really gain momentum last half hour of the day, like it did yesterday. I mean, look at this. It sold off, and then it started just coming up, and then it rallied on a high note. So, and it finished up over a point. So it was obviously a very, very strong market yesterday after we got off of the VIP room. I'm glad I told you to watch it carefully, not just to liquidate it. Although it is getting a little bit hairy to the upside right now. But again, I think it has a little bit more of momentum, especially if the news is positive. The news is positive on earnings. That means less chance that the Fed is going to be as aggressive. And if the Fed is not as aggressive, that means we may have a good potential for a run-up in the bond and financial stocks. Speaking of the financial sector, here's the financial sector. Keep an eye on it. I mentioned the other day that it looks very, very strong. And I think if the earnings are positive, we could see the financial sector go up to the 36 level. It's right now at 34.80. It's already going to open up about a 1% higher. So keep your eye on the 36 level in the financials over the next course of a few days. Now, in terms of news, we've got consumer sentiment and import and export. The big news for the week is already behind us. The CPI was good. The PPI was good. Jobless claims was good, and I have no reason to believe this information will be bad, the import-export or the consumer sentiment. Another sector you want to keep an eye right now is the energy sector. The energy sector is not looking as pretty, and I'm only seeing upside in financials right now because all of the earnings are so good, but we're seeing divergence right here between this area, and this area, and we can't seem to be getting above this level right now. So I think that energy stocks are going to be coming down. Also, if you look at momentum levels on energies, you will see 50-day line. Look at this. And it's starting to turn lower. So again, we may huff and puff around here, but I'm just going to remind you that we haven't been this high let's see how long. Wow. Whew. I mean, it doesn't usually, once it goes here, it doesn't usually stay this high. It usually cools off a little bit. So we may see some downside in the energy sector. Let's talk a little bit about global economy, put everything together, and then I'll give you some support and resistance levels that you need to pay attention to, which may be very, very helpful for you. So three U.S. benchmarks indices, the Dow, the S&P, and the Nasdaq closed higher on Thursday as evidence proved that inflationary pressure is subsiding, and it is subsiding, just not as fast as consumers want it to. The S&P 500 climbed to a 15-month high, and the Nasdaq climbed to a 1.5-year high. Bear market, right? Everybody thought we were going lower, but it doesn't seem to be the case right now. Producers' price index showed that prices eased, which is very beneficial for basic materials, because that means inflation is not hitting basic materials, which means they can run up, which is another reason why we saw a rally in basic materials. Unemployment rate is at 237,000 from the government. It doesn't seem to be above the 250 level, which means labor market is resilient. Now, again, Fed speakers, Daly said it's premature for policymakers to assert that they have taken sufficient measures to return U.S. inflation to their target. I mean, it's as clear as day. It ain't over till it's over. Waller said he anticipates the U.S. central bank will need to implement 2 additional rate hikes this year to lower inflation to its target. We will see about that. There's currently a 95% chance that the Fed is going to raise rates 1/4 basis point, and the bond market is rallying on that, which means the bond market is anticipating a slowdown in what the Fed is going to do. As I mentioned, there's going to be JPMorgan, Wells Fargo, United Health, and Citibank, and so far, again, I don't know which ones are reporting after the bell, but so far everything is looking positive. I mean, every big cap stock, JPMorgan, BlackRock, Citi, I didn't look at State Street, but United Health and Wells Fargo, they're all looking bullish so far. Let's look at State Street, STT. Let's see how that's looking. State Street is up too. So all of the stocks are up pre-open. Which is pretty important. U.S. Michigan consumer expectations are going to be reported today. We'll see how that number looks, but it ain't a major number. The major number was the PPI and the CPI. So again, I don't think this, unless the news is going to be completely off the charts, and I don't think it will, I think it will be a nothing burger. Europe, investors are bracing for earnings in U.S. and in Europe, and I'll tell you, I'm really curious to see how we're going to do, because the stock market has moved up so much since last quarter, and I don't think there's anything new this quarter compared to last quarter. So I think it's going to be like the situation we had with Delta yesterday. Delta came out with good numbers, but the stock didn't really do anything great. Let's see how Delta closed. Yeah, see, it didn't really do anything, and the number was actually positive. So I'm very nervous. I'm very, very nervous about this earnings season in light of everything we're seeing, and in light of the fact that the stock market ran up so much. I mean, some of these bank stocks, tech stocks, they're up 50% from last quarter's earnings. So it's something we need to really pay attention to. China closed slightly higher as investors caution in anticipation of the release of the second quarter GDP, which provides further insight into the state of their economy. I'm going to tell you right now, they are not doing so well, which is putting a little damper on U.S. stocks, especially related to China. And there's tension with chip stocks. And it's just, there's a lot of drama with China. I thought that after COVID, things would get a little better. But boy, oh boy, it doesn't seem to be the case. Japan, the 10-year government bond yield reached its highest level in 4.5 months. And there's speculation that they're going to be adjusting their ultra-loose policy because their prime minister doesn't want low rates, because if they have ultra low rates, they're going to be in a recession for another 25 or 30 years. Don't get me started with Japan. Microsoft got upgraded. AT&T got downgraded. Leonard Homes got upgraded, which means there could be more upside for housing stocks and home building stocks. And as I mentioned, you've got earnings on JPMorgan, United Health, and Wells Fargo. Now, for all of you, let's see here, for all of you day traders out there, I know. We've got some stocks that are moving up pre-open. Let me give you those stocks to show you which ones are really moving up right now. The ones that you want to look up are Lunar, if you're a day trader. Nikola, it's up 16%. They can. These are microcap stocks, and Pain Reform. So Pain Reform. These are the stocks that are opening higher pre-open. These are the day trading stocks. Nikola, Pain Reform, ARB, Crowd Cloud. Not Crowd Cloud. This one's only up 2%. But if they're up like 22%, 62 may be a little much. But I like stocks that are up like 15, 20%, the penny stocks. Holo, you could see this. Let's look at Holo real quick. For those day traders out there, let's see what's going on. Yeah, the stock closed at $3 at 37 cents, and it's going to open up at $3.59. That's about 4% higher, but a little bit earlier it was up about 20%, as you can see right here. Hola, let me see, just go back here. Hola, oh, now it's up 7%. But bottom line is, these stocks, look for stocks that are opening up at least 20% higher. These smaller stocks, there could be a more continuation the first 20, 30 minutes of the day. So pre-market, keep an eye on NKLA, keep an eye on PRFX, keep an eye on ARBB, keep an eye on SAI to the upside. To the downside, keep an eye on Nokia. It's going to open up down 9%, at least right now. Those are the most active stocks. So pre-market gainers, good thing to look at. And most active stocks, very, very, very important if you're a day trader. Again, important for day trading. Now, let's talk a little bit about levels on the S&P 500. Now, looking here, looking intraday on a 5-day view, which is what we want to see, if the S&P starts dropping below 447, that's it, party's over. If the QQQ starts dropping below 375, the party is over. For financial stocks today, which are opening higher, look for a breakout above 3460. That's a pretty good breakout level. All right. And in terms of volatility, I'm looking for volatility to continue breaking lower. I don't think there's any more upside. As I mentioned right here, this was it. I think volatility is done. Keep an eye on BlackRock, Citibank, United Health, and Wells Fargo and JPMorgan today. And if we get a breakout in the financials, there's a good chance we'll see follow through in the Dow. This morning, right now, as we speak, let me just go here, market overview. As we speak right now, the Nasdaq is up about 1.5%. Let's look at the futures real quick here. No, the Nasdaq is actually down right now a little bit. It's opening down. But the Dow's up about 140 points. This is financials. If the financials give up a little bit before the session is done, you may have a vulnerability in the Dow. But the Nasdaq looks like it's losing ground to the Dow. And I wouldn't be surprised to see some tech stocks, market cap move into financials if the numbers are really, really solid. Boy, we covered a lot of ground today. Now, folks, I've been working with a private group of 92 beta testers perfecting a very special type of software. A software that's so powerful, it's able to track exactly when Wall Street big money is likely to flood into a stock at any time. And the track record of this new system live, it speaks for itself. We've nailed 25 out of 29 trades with an average return on all winners and losers of 17% with an average hold time of 6 days. I honestly cannot do better than that. I'm so convinced this new software will change the game for retail traders worldwide that I filed a patent for it. That's right, a patent for it. So if getting in front of what could be some of the biggest moves on Wall Street is something you're interested in, click on the link below, get all the details right now. Follow the link, find out. 25 out of 29 trades, 86% win rate, 17% average gain, including winners and losers every 6 days. That's amazing, all right? I don't think I can overjump my head on that one. Folks, follow the link below. Check it out. Remember, subscribe to my Telegram channel and join my VIP room today live at 11 a.m. Eastern Time. Have a great weekend and send me emails, support@marketgeeks.com, and comment in the channel. Bye.